Hello and good morning, ladies and gentlemen. You're with Martin Panev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. Starting as usual with the North American markets. Yesterday, the industrial Dow Jones was pretty much moving sideways, no change there. The NASDAQ is only about 20 points up. The Dixie Index is down with about 0.20 points. Yesterday, after the Bank of Japan's decision, investors are now looking ahead to a reading on second quarter U.S. economic growth, which is today. If it comes out positive, we could see a solid argument for a rate hike in September. This is especially true if the non-farm payrolls is also positive next week. The good part is that near-term risks to the economy have basically vanished. This is in large part due to the fact that the labor market is stable. Today, initial jobless claims came weaker than expected yesterday. Continuing jobless claims, again, weaker than expected. Today, we're waiting for the gross domestic product annualized personal consumption expenditures prices. This would be quarter on quarter. GDP price index, core personal consumption expenditures, again, quarter on quarter. Chicago Purchasing Managers Index, and also in Canada, gross domestic product month on month. Next week, as I said, we're looking for the non-farm payrolls on Friday, and on Monday, we have the ISM manufacturing PMI and prices paid. Also, unemployment rate is due to come on Friday. Moving to the European markets, today we're looking at preliminary GDP data and inflation CPI reports. Also, unemployment rate for the month of June. By the end of the day, we're going to see the bank stress test info and, as I said, CPI preliminary data. Asian Pacific markets, the BOG interest rate remained the same, beating expectations of minus 0.2%. National CPI year on year remains at 0.4%. It pretty much came out negative. All the CPI reports came to the downside. We also had the jobs application ratio for June as forecast. The reports came as expected. The unemployment rate better than the expectations at 3.1%. Industrial production month on month for June, preliminary report, again came better than the expectations, and year on year dropped to minus 1.9% versus minus 0.4% previously. We also had a few retail reports coming from Japan. All came out better than the expectations, including the large retailer sales for June, which came out 0.7% better than the minus 1.5% previous reading. Japan's consumer prices dropped for fourth consecutive month, showing how far prices are from Bank of Japan's 2% inflation target. In a slew of key economic indicators for June, released just hours before the Bank of Japan announces any changes in monetary policy, household spending slumped while industrial production rose more than the economists forecasted. This pretty much rounds out most of the key data for the month. The Bank of Japan expected its purchases of exchange-traded funds in US dollar lending program while refraining from boosting the pace of government bond purchases that have formed the main part of its monetary stimulus program. Also, as I said just shortly before, the Bank of Japan kept the rate at 0.1%. Yen climbed, the government bond plunged, the Nikkei rose. Next week, on Tuesday, we have PMI reports for China, and also on Wednesday, monetary policy meeting minutes are going to be published. On the commodity sector, yesterday the S&P 500 index had a range of 15 points at 2163 right now. The gold had a range of $13. Currently, the price is hovering around $13.35 per troy ounce. Silver had a range of 41 cents at 2015 right now. The crude had a $1.20 range down to $41 per barrel. Natural gas is trading at $2.65 at the moment. yesterday, the usual range of 8 cents. Gold prices added to overnight gains in North American trade yesterday, climbing to a more than a 2-week high after the Fed gave no indication whether it would raise rates in its next meeting in September. Gold is up almost 25% for the year to date, boosted by concerns of overall global growth and expectations of monetary stimulus. The EIA natural gas storage change yesterday in the US in the week ended July 22 rose by 17 billion British thermal units, below forecast for an increase of 26 billion. Futures rallied sharply in North American trade yesterday after the data was released. Crude futures also fell sharply yesterday, officially entering bear market territory, as further signals of global oversupply dragged oil prices to levels not seen since a failed Doha summit in mid-April. Crude fell in Asia today, ahead of a closely watched review of policy and interest rate decision by the Bank of Japan, as markets see continued weak global economic growth hitting demand prospects. That was pretty much all from me for today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye.